Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zach Meir with the Bulletin Board Heroes here on Share Talk for Tuesday, the 21st of April, sponsored by the UK Investor Show. Starting off with Chesterfield Resources, a stock which I managed to avoid for all of its history, I think, so far, but the setup today looking quite strong. We've had a bear trap gap reversal from below 2.5 pence. Also broken back above the 50-day line at 2.56, broken this line of resistance from 2018 at 3 pence, and we're currently nudging the 200-day moving average at the present share price. View at this stage is, at least while we're above the 50-day line, a retest of 5 to 6 pence, or perhaps more, is on the cards over the next few weeks. We obviously already had that spike up to 5 pence intraday and expect to see that revisited relatively soon. Ideally, there's no break back below 3 pence, but that may be a little bit too much to ask. Next up, another stock which has taken a long time to get its bullish show on the road, but the current environment, people working at home, looks like the perfect situation for it. Phalanx Group breaking this falling wedge from back in September, and the 50-day line at 1.02 pence at the end of last week, and since then pushing higher. Initial target, obviously, the 200-day line at just under a penny and a half, but best case scenario over the next couple of months, as high as 3 pence at the top of a broadening June triangle from last year. So everything to play for there for the bulls, especially while the shares hold above the 50-day moving average level, currently at 1.02 pence. Next up, a stock which I covered a few weeks ago. They managed to double before falling back again. But Gfinity never broke back below the breakout level, which was a penny, the break of that triangle there in the middle of March, which was a good sign. Current situation is that while we're above the 50-day line at 1.25 pence, looking for at least a retest of 2.5, which is March resistance, and best case scenario target over the next 1 to 2 months up to 3.2 pence, which would take the shares back to where they were at the beginning of the year. On to an obscure situation which so far managed to push higher. Mobile Tornado gapping up for April above the 50-day moving average, which is normally a very good sign. We've seen that for several days there, and at least while we're above the 50-day line at 2.86 pence, looking for further gains, possibly as high as 6 pence over the next next month or so, which is the top of a broadening triangle formation from back in August 2018. So could be a reasonable upside there, even though you can see it's a very illiquid situation. Stock, it's always nice to find a stock which is just getting off the ground, and this looks to be the case with Panther Metals. Beautiful breakout of that triangle that has been in place since the middle of February. Nice green candle there today, opening at the low and powering higher towards the 50-day line at 2.8 pence. End of day close above the 50-day line should be enough to give us at least a retest of February resistance at 5.5 pence. Probably looking for up to 6 pence at the top of the rising trend channel from January. Only back below 2.3 pence, really upsetting in fact, really back below, 2.5 pence there, really upsetting the bull argument. And really wouldn't expect the shares to fall back much further than that on any retracement after today's very strong move. Stock which from memory is in the healthcare area and should be thriving in the current environment, but hasn't so far, but may do now, is Totally. You can see it's broken its triangle from February, and the 200-day moving average at 11.76 pence. End of day close, end of week close above that area should be enough to take the shares up towards the top of that rising trend channel from February at 18.5 pence. and the upside valid while we remain above 10 pence. Really, I think that should the last bear trap low should cover any jiggery pokery in terms of the stock not performing. On to Two Shields, where there's a bit of a buzz on Twitter and in other places regarding the potential upside here. I nearly covered it yesterday, but just wanted to be safe rather than sorry. Now I'm sorry that I didn't. Situation here, we've broken the 50-day line at 0.09 pence, which was the reason I hesitated yesterday. But an end-of-day close above that and a break of that near-term triangle, tight triangle from the end of February, should allow the stock to keep moving higher, and a target here up to, initially at least, up to the top of a rising trend channel from September would appear to be on the cards at 0.18 pence. So still plenty of upside there. Ideally, there's no break back below the 50-day line ahead of that move to the upside. Finishing off with a stock which I've covered on all the dips all the way down, including the last one where there was a gap within that falling wedge for Versarion through the 40 pence level. The shares sort of slid along the 50-day line for quite a while, 2-3 weeks, but the break of that initial April peak at 56 pence is and has been telling, and really while we're above that, looking for further significant upside up towards the 80 pence zone, and the 200-day line at 85 pence would be what we would hope for. After that, best case scenario up to £1.20, but given how many times the shares have not delivered on the upside, I think it's probably safer just to go for 70 to 80 pence as the initial target here. The bull argument really in place while we remain above the 50-day line, currently way down there at 46 pence. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.